In this video, I'm going to be breaking down when to use the lower time frames mixed with the high time frame analysis. This is backpacking off of my lower time frames video that is doing very, very well. You guys seem to like that one. It's got like 20,000 plus views now. So I'll link that one in the description as well. I'm going to be breaking down how to use the lower time frame mixed with the high time frame using SMC and liquidity concepts. This is going to be a great video. If you do enjoy the trade breakdowns, please drop a like, drop a comment, hit subscribe. Let's jump into the video. All right, thanks for meeting me back on the charts here, guys. This is going to be a great breakdown using all SMC concepts mixed with high time frame analysis and pretty much everything you should be looking for when you are getting on the charts every single morning. This relates, like I said previously, to my last video or one of my previous videos talking about the lower time frame, when to use the lower time frame, and this is a perfect example of when to use the lower time frame. If you guys remember in the video, I talked about how you should only be using it after. It should be the last piece of the puzzle after you have your higher time frame analysis, after you have your higher time frame bias, liquidity pool targets, POIs, whatever it is, you name it. This is a perfect example, so let's just dive into this trade example. So looking at the weekly time frame, you want to start off on the weekly to the daily to the 4-hour top-down analysis like I stated before. When I'm looking on the weekly here, there's one area of interest that I want to see get taken out, and that's this low down here. So if I know on the high time frame that I want to see this low get taken out, why on earth would I be looking for longs anywhere within here, right? That's where a lot of people get caught on the wrong side of the market because they know where the market is most likely going to head on the higher time frame. They're just too impatient to wait for that move to happen. So then they start trading in the opposing direction of the higher time frame trend that they know is silly, and they end up getting caught. And I am a person who this has happened to many, many times in the past. Now I barely trade counter trend, and if I am trading counter trend, I make sure that I'm out of the trade by the time price gets into a discount or premium of that counter trend move. So let's just take a look at the weekly here. You can see we have this liquidity pool down here. Then I jump down to the daily time frame, and you can see that we are bearish, right? We're bearish, we're popping up, retesting areas, popping up, retesting order blocks. Ultimately, when we see order flow in one direction like this, or structure in one direction like this, it'll most likely maintain structure until we take out the high time frame liquidity pool. And then the market will reverse and we'll start to see structure in the opposing direction. That's usually what happens. So we don't want to be looking for longs here at all. We only want to be looking for shorts. So with this high time frame knowledge, then we can start to break down to the lower time frames, right? If we look on the 4-hour chart, you can see, again, clearly bearish. We come up, we mitigate this imbalance. We have a strong move down. We come up and create a new imbalance as well. If I draw this across like so, we have a fair value gap right here that the market could come into and retest. Then we want to jump down even lower as the analysis plays out, right? So top-down analysis means we start on the higher time frame and then we build our narrative. So like I talked about previously, I want to see this area get taken out. I'm not looking for longs. I'm only looking for shorts until this area gets taken out, okay? So it makes it really, really easy. I am only looking for shorts until we take this area. Then after the hourly time frame, we see what's going on here. We jump down to the 15-minute time frame, right? If I'm looking at the 15-minute time frame right now, I see a bunch of order blocks over here. I see an imbalance up here, right? But most importantly, I see Asia high over here, right? So I'm just going to play this out for a second and wait till London session comes in. Because like I talked about in a previous video with the daily cycle, a lot of the time with London, we'll take one side and then head for the other. So this was a perfect example of that happening, okay? So let's just fast forward till we get to London session. So you can see we are now in London session, okay? Pay attention. I want to see the market take some sort of liquidity and then provide the entry setup, okay? Just a reminder, we want to see the market come down into this area. So in order for the market to go down, we have to take out some old high, some buy side liquidity in order to take the market down to look for counterparty liquidity. If I'm looking at this from a liquidity perspective, I see this high right here is Asia high. I want to see this get taken out of the market before I look for lower time frame entries. Boom. So you can see London happens. We end up taking this high, right? Beautifully. If we look on the 5-minute time frame, now all we're looking for is some sort of lower time frame break of structure. So we want to see this area break, because when this area breaks, that shows that we've had a lower time frame break of structure. And you can also see, right, if we're looking at this right now from a liquidity perspective, all this trendline liquidity building up, right? But because of the higher time frame, we are not looking for longs. And this is a great example to add on to what I was saying earlier If you're using the lower time frames without any other context, you're going to be caught on the wrong side of the market. This play here may look great for longs, but when you zoom out and you look on the higher time frame, we know we don't want to look for longs until down here because the market is most likely going to reach for this low. So it just eliminates half of the equation right away for us. So now all we're looking for is this low to break. So you can see that we did trade below this low now. This low has been broken. Now you can look for even lower time frame entries, right? I see this imbalance right here is a nice area we could potentially look for shorts. I'm going to mark that out. So this fair value gap, we swept liquidity to the left, causing a move, and we've also broke below this low. So we've had a lower time frame break structure. So this is an area you could look to put your entry, right? Somewhere within this fair value gap, stop just had to be above this high. And where would you target? You could target this low. You literally could target this low as an entry for like a 1 to 11. Would you be catching that whole trade? It's entirely up to you. But let's just see if the market presents an opportunity here. All right, so yeah, let's see if we can put a pending on here. If you guys aren't familiar with FX Replay, you can click this, place a limit. Best backtesting software there is, hands down. Shout out to them, 1 year anniversary. Pretty special, grateful to be partnered with them. So if you do want a discount and you want to use this amazing backtesting software, click the link in the description and use that code, you get 15% off. I promise you, once you use it, once you use the free trial for a week, you won't want to go back. But I just had to throw that in there. So let's just set a pending and see if we get tagged into this trade. All right, so it doesn't look like we are going to get tagged into this first position. Now, what I'm looking for, if you do get swerved, this is a perfect example on what to do if you do get swerved on a position. Don't marry it. Look for another opportunity because using these lower time frame moves like this, the 5 minute, the 15 minute, whatever it is, a lot of the times the market will present another opportunity. So I'm just going to cancel this pending limit and not marry the idea because what I can see now is a new price leg that has been created. And not only have we broke below this low, we also went and broke below this low over here, and we broke below it with aggression. So when I'm looking at price action here, I'm looking for an area that caused an imbalance, which is right here. So I don't care what's going on up here at all. I see all these limits, all this is balanced and efficient. I'm going to be looking for an inefficiency. I'm going to be looking for a fair value gap, an imbalance, an order block, whatever it is, whatever you want to call it, right? So now I'm looking for, honestly, I want to see this low get taken out. I want to see this low get taken out just to solidify that we've had a new structure break. Okay, so now this is even better. If we look on the 15-minute time frame right now, we have broken below, and we also, look what else we've done. We went and created a fair value gap right here, right? This is showing intensity, this is showing momentum, this is showing intention to the downside, which makes sense because look, remember what I said at the beginning of the video. We took this buy side liquidity, we took Asia high, we have our sell side liquidity objective, which is down here, and this is where we want to look for the market to retrace to, right? Or run for, if you will. So now looking on the 5-minute time frame, there was a beautiful entry here on the 5-minute time frame here in London session. I'm going to delete this off, and let's pay attention to this area here. You can see this order block right here. Notice how we swept liquidity, we swept the candle beside it, and then caused a move to the downside. We also created an imbalance. In instances like this, I like to use 50% of the imbalance just so I don't get swerved. But if we take in consideration, this is a 15-minute order block, you can just use this 15-minute order block to make sure you don't get swerved, right? You can refine it, and look, the 15-minute actually covers this 50%. So I'm just going to go and set a pending on here. My stop loss now would not be all the way up here because this is all balanced. So I would just have my stop loss covering these highs here. And where would I be targeting? I'd be targeting this low. And this is how you're able to get those nice swing moves, not even swing moves, but you can get those high time frame moves while using the lower time frame. But remember what I said in my previous video, this is when you tie it all together because you have the high time frame narrative, you have the high time frame analysis, then you're just using the lower time frame, the intraday time frames to find entries. So the 15-minute, the 5-minute, and then you can use the sub 5 if you want to, but you don't have to at all. I have people in my community that don't even go below 5 minute and they do very, very well. It's honestly a personal preference what you want to use. So now I'm going to set a pending order on this imbalance and on this 15-minute order block here. And let's see if we get tagged this time. So you can see we're tagged into this trade and we are now approaching the switchover. We're coming down with momentum very, very nicely. You can see New York comes up, fills this imbalance. If we look on the hourly time frame, nice imbalance fill right here. If we look on the 5-minute time frame as well, pay attention to price action here for 1 second, another lesson. Notice the difference between the moves down versus the move up, right? I've covered this in a previous video. Strong move down, corrective price action up into the origin. You could have looked for another entry if you were someone who wanted to look to scale in there. But again, you don't have to. Let's just play this thing out and see if we do hit this target. Boom. So you can see we take the target, right? And this is all just using the high time frame analysis and then using the lower time frame for an entry. So thought this was a perfect example. Beautiful, beautiful example. And yeah, it sucks I'm not a London session trader. Otherwise, I would have been involved in this trade. But it was a beautiful one. A couple members caught it and I had to cover it. If you're interested in how I trade in more detail, click the link in the description and check it out. If not, you can continue to watch these free breakdown videos. It's entirely up to you. Let's be 1% better every single day. Take care, everyone, and I'll see you in the next video.